Hey everyone, so the bear flags from yesterday's video ended up rolling over into further weakness. We had another day where all of our major sectors were dropping to the lows at the same time, showing us that significant bear control. And we also saw some extreme RSI levels, and it was reminiscent of Friday as far as the complete short-term bear control. So this was a channel I was watching into the morning, and we rolled over pre-market, and we were right at that level into the open, and then obviously fell right through it. So this is the NASDAQ here, but the S&P 500 had the same thing. One thing to note is when you are seeing all of our major sectors, and again, it's QQQ, XLF, XLV, IWM, when you're seeing them all hit the high of the day at the same time or the low of the day at the same time, one thing that you can do as a trader is completely eliminate the other side. So if we hit all the names hitting the lows at the same time, I'm not looking for a bullish entry today. That just means you're only going to be patiently waiting for a 5-minute lower high, a 15-minute, an hourly lower high, and that can help you from playing counter the trend. And during the live stream this morning, I was making note of, we got to be cautious. If you're trying to play this bounce, you have to use a stop level because short-term RSI levels are crushed, absolutely, but long-term RSI levels are not. I only step in front of extreme bear weakness if you align a bunch of RSI levels on a bunch of time frames all oversold at the same time. So I personally approached this morning just saying, I'm not interested in a bounce. This whole time, nope, not interested in a bounce, not interested, okay, I'm getting interested. And so it just has to get to the extreme of the extreme, and then I get interested. So I ended up having a pretty good entry here while I was live streaming where my first entry was in the upper 299s and my second entry was in the low 299s. My stop loss would have been based off of dollar risk that I would be willing to take on the trade. The bounce got going. I sold half at my first entry. So now my break even is pretty much the low of the day, just above it. And then I sold my second half at 5-minute EMA 12 resistance. And so that ended up, I wasn't using any significant size because I was playing counter such significant momentum, but a nice little half-day maker. But again, it was, if I was going off of 5 and 15-minute RSI, I would have entered this trade way too early because the 5 and the 15-minute RSI were both in the teens a good bit before the low of the day. But it was just being extremely picky, saying I am not interested, and then finally getting to the point of saying, all right, well, I guess I have to be interested because all of these time frames are now aligning oversold. It was the hourly, 30-minute, 15-minute, 5-minute, 2-minute, etc. But again, there would be nothing wrong as a trader today just saying, I'm not playing bullish. And then you scout the bearish entry. We hit 15-minute EMA 12. It was an hourly bear flag that rolled over to a new low of the day. So that would have been a worthwhile enough trade in itself. That's a 1% drop from there. So we then got to a point where that bear break hitting a new low of the day, and you have to keep in mind all major sectors were hitting the low of the day at this drop. And then QQQ hit a new low of the day, and XLV and XLF did not. And so it started to feel to me like momentum was shifting a little bit, and just put out a little warning, bears, don't get complacent. You've absolutely owned today from the open to where we stand right now, but the bear break with a lack of follow through and the fact that our other sectors, what did I say? So the NASDAQ futures is oversold on the 4-hour, the hourly, the 15-minute. The bears need to pay attention and not get lazy as the low of the day break lacked follow through. We're still in a downtrend on all time frames, but that ended up being just about the low of the day there at 132. We had one more little push down. But again, the point was, you had control all day, but we're not going to forget that we're oversold on all these time frames, and that bear break lacked follow through. So it just showed us enough of a shift in momentum. And then we ended the day with a 30-minute inverse head and shoulders attempt. So keeping an eye out for short-term bounces to cool things off from overbought, or I should say oversold conditions. And this is a potential 30-minute inverse head and shoulders if we pull back from here. But really, just use the time frame that you care most about. If you're a swing trader, maybe it's the daily downtrend that you care about. Maybe it's the 4-hour downtrend. Maybe it's the 12-hour. Whatever it is, pick that time frame and focus on it because we can bounce all night tonight and still just be looking for another 4-hour lower high. So bears following through still. And again, the retracement is getting more and more significant. It's entirely possible that we trade within this range, for most of September. If we pull back a bit more and set the higher low, and then we bounce into a lower high, next thing you know, we're towards the end of September and forming a tightening weekly range. So that's a possibility on the table, but no sign of a weekly higher low shaping up at this point. It's still something that we're keeping an eye on, but we need trend changes on the hourly at a bare minimum, and then we need some daily bounce to create space for a daily trend change attempt to eventually try and take place. So big win for the bears, bit of a bounce into the end of the day, but not a big enough bounce to change anything. Bear flag on the S&P 500, confirmed. And again, we're still in an hourly downtrend. So downtrend on the daily, 4-hour hourly is our short-term guide as long as it remains. The dollar did see a little bit more pullback, but then a big bounce that's keeping the daily strong. So again, the level that I care most about is 107.58, and if that level breaks, it will be very notable to me, and I will likely be acting on that as far as being more bullish, whether it's metals or crypto or stocks remains to be seen. But if we hold that level, it's just a daily high or low. Yes, the bull break lacked follow through, but if we do not lose support, the bulls keep that control, and they just need another high or low before a potential bull break. So still keeping a close eye on the dollar, but it's all about that 107.58 level. And the way that the metals are trading, I just don't foresee any way that the metals can bottom without the dollar topping out. And we'll look at that in just a second, but spoiler, a lot more weakness in metals and miners. Semiconductors remained weaker. Again, yesterday talked about how this is one of our lead bear sectors because it's weaker than QQQ, and QQQ is weaker than SPY, and NVDA is weaker than SMH. So a lot of follow through once low of yesterday broke. Another 3 to 4% to the downside. Hourly downtrend on individual names remains our guide. Again, hourly oversold bounce into the end of the day, but until we change the hourly trend during regular trading hours, the bears are extremely comfortable. And then once we change the hourly trend, we're going to zoom out and scout a daily lower high with tons of space for it to form. So at this point, if I'm looking bearish, I am being patient for a daily lower high on a name like NVDA that over the last 3 days has dropped probably like, what, 17%? 16? 15.5. Tesla bear break. So we broke one level on Monday, but not the second level, and we took out the second level today. So following through with both support levels breaking, hitting the lowest level in over a month, daily downtrend confirming, and week, or I should say monthly lower high potentially shaping up. We're going to close this month right near the low, and so it's possible if we break the low of August first thing in September, monthly lower high very quickly set, and then looking back towards the lows of 206, knowing that the bulls must hold those levels to try and regain a monthly uptrend. But at the moment, we are in a monthly and daily downtrend. The weekly, a bit ambiguous. We lost the weekly high or low support, but not officially in a weekly downtrend. But again, just further weakness here as well. Hourly bounce. Potentially just looking for an hourly lower high. The burden is on the bulls to confirm the hourly trend change if we're going to believe that any of these bounces can have follow through. XLV Healthcare, still a lead bear sector, 125.23 double bottom held, and we're approaching daily oversold conditions. Same thing at this point, I can't go bear on a sector that's dropped that hard, that fast. I need to be waiting for a daily lower high if I'm going to be comfortable on the risk reward for a trade being favorable. Financial sector, also further downside today, but not as much. So bears slowing a little bit. You can see the hourly bounce took place midday, and we didn't hit a new low of the day into the end of the day, whereas again QQQ did. So it's a little hourly tightening range. If that breaks bull, we're going to zoom out and watch for anything under 34.92 to be a daily lower high. IWM, more bear follow through. Hourly downtrend is our guide here as well. Anything under the high of today is just an hourly lower high. So if we open higher tomorrow, We scout a lower high compared to the high of the day. And if we open lower, there's the potential that the hourly downtrend continues. But again, I'm at a point here where if I'm a bull that's looking for weekly higher lows, I need to see an hourly uptrend at a bare minimum before I even consider starting to look for it. Because we know we need a daily trend change to be confident the weekly higher low is set. And that's going to take a while to develop. And it all starts with an hourly trend change to the bulls. Biotech sector also further downside. Bounce into the end of the day. Still an hourly downtrend. High of yesterday. Lower high the end of the day. Lower high the high of today. And anything under 85.17 is just another hourly lower high. Just keep it simple. Hourly downtrends are our guide. As long as they are intact, bears have full control. So we were looking at some relative strength sectors. Energy, cannabis, uranium. And today with the market weakness, energy dropped hard with oil. Cannabis dropped real hard. We'll look at both of those in just a second. Uranium bulls bought the dip very impressively. Look at that dip. So this is the weakness where, we had a pop first thing, broke the high of yesterday, couple percent further follow through, but then we succumbed to the market weakness and then a very aggressive dip buying all the rest of the day. And so we hit 5 and 15 minute oversold conditions. And this is an example where, again, I was live streaming and I said, I'm going to play the CCJ bounce if 28 breaks. And so then I make that clear statement and then I keep looking at other things and I, take my eye off CCJ and I just keep looking at it and say, are we breaking 28? No. So I'm not doing anything. And in the end, it turns out that unfortunately, it did not trigger that trade. I do have some uranium exposure in a swing trade, but CCJ, but I would certainly want more. And that was a good opportunity to get more, but 3 pennies. Just missed my criteria for entering into that oversold bounce. For the uranium names, they all saw that dip buying. If we fail the high of today, first thing tomorrow, we will have hourly equilibriums to be watching, and bulls will be looking for hourly higher lows compared to the lows of today. So watching that resistance, and again, the fact that we saw this dip buying and closed green in many names, this is now clearly the lead bull sector out of anything that I'm watching. And again, we're just watching it slowly gain some momentum on Reddit, on social media, on CNBC. Nice volume as well. So cannabis, CGC had a big red day today. We opened right near the high of yesterday and just dumped. This is the steepest dump I've seen in CGC, watching it for years, that I can recall. I guess maybe there were probably some bear news events, but in 4 minutes, we dropped 10%, which again is massive. And then we just never really recovered. There were some decent bounces mixed in there, 4% bounce from the low of the day, but bulls have to be cautious of cannabis losing momentum here because we've got our high, higher low, failed resistance with the double top, and now heading back down towards that 328 support. And there was a little bit of an opportunity as a laggard play because, again, after 4 minutes, we could say, what in the world is going on with CGC? Is there bearish news here? And at that point in time, TLRY, its peer, was down 2.5% versus 10%. And so this 2-minute little weak bounce was a real nice laggard bear opportunity where it too rejected from the high of yesterday by a few pennies. And then once you see CGC falling apart, you can say, all right, well, short the lower high, short this bounce and just stick a stop over the high of the day. And we ended up from there dropping 4% from 934 to 946. So 4% drop in 12 minutes. And at that point in time, CGC bears had used up a lot of their momentum. Now we dropped just about as much. But either way, I would have had much more confidence in TLRY for further downside just because it had not dropped nearly as much. US cannabis, MSOS, topped out, unable to break the high of yesterday, daily inside bar, but clearly bears controlled the day and it started to gain traction the end of the day with that bear control. And in hindsight now, looking back, I was looking at this action yesterday and saying, what's going on here? Is the ETF creating shares and selling because there was a ton of volume that traded within this range. And really, I was watching the 1375 to 1359 range. We generally don't see that much volume, and it might not look like a lot, but if you condense it down here, I mean, we were trading, let's go to the 30-minute. So we traded 200, 300, 400, almost 500,000 plus shares, which is a lot for MSOS within that range. And now it's obvious in hindsight, that was distribution going on. I thought it might have been, shares being created and being sold to raise capital, but just looks like distribution where bulls were still grinding up and there was still nice volume, but price clearly stopped ascending nearly as rapidly. And now with this rollover today, that was some distribution going on. So we're going to look for a daily higher low to be the result of this pullback. But again, we've got to be cautious of cannabis bulls losing some momentum. And we're seeing it more so on the Canadian side, at least initially. And watching to see if the low of today breaks tomorrow for that daily consolidation to be underway. We're also seeing momentum lost in the psychedelic names. CMPS, this daily pullback is a red flag. We double bottomed at 1508, but the bulls wanted to see a daily trend change here to set the weekly higher low. So retracing all the way back to 1508 is a red flag for me. The increasing bear volume on the daily is a red flag for me. And so it's looking like our weekly higher low is not being set yet. Unless we have a solid green day tomorrow, then I'll change my tune because that double bottom will be convincing. But this just makes me a bit more patient. And ATAI, another name, daily rising wedge broke bear. It's testing 422 support. MNMD, unable to see much bull momentum off its double bottom. So just seeing the psychedelic and cannabis space losing some momentum for the bulls. And for me personally, probably going to have to see SPY and QQQ give us weekly higher lows to start shaping up to have confidence in these sectors again. But not uranium. Uranium still got it. So now onto the metals. Again, the 4-hour bounce yesterday was nice, but we just topped out and rolled over. Tested the low. So no trend change. Nothing's changing. We are in downtrends on every single time frame. Weekly, daily, 4-hour, hourly. Again, we just aren't going anywhere if the dollar is strong, is what is becoming more and more apparent. You can say, well, we haven't broken to a weekly lower low yet while the dollar hit a higher high. That's one takeaway, but how long can the bulls hold up hoping the dollar tops out? We'll have to see, but silver is weaker. Silver testing that low, 1814, it's in play. And again, just weekly downtrend for 5 months now, and that's not changing. Miners, weekly bear flag confirmed. We know that they've been weaker than the metals, and they're showing us that follow through now. And again, the miners are currently at the weakest point that they've been in the last 2.5 years almost. I know there's a ton of fundamental metal bulls out there, but man, you can't argue with this price action, which, if you're into technical analysis, there is very little bullish to be said about the metals and the miners right now. Oil, red flags. So oil weekly resistance is 99.75, and we got up to 97.66, and we had a big drop today, and that drop started pre-market, and it followed through all day, all morning, I should say, and that drop's pretty notable. I mean, that's a 7% drop in the span of 10 hours. That's a rapid drop. So a bit of a red flag. We did lose the daily uptrend. So the higher lows have been lost. We're going to be watching for a 4-hour lower high to be the result of any bounce from here. Energy names weakening a bit. OXY. Bull flags confirming straight into a drop is a red flag for lost momentum. So we may be shaping up for weekly consolidation. CVX, the other name we've been watching, same thing. Daily losing momentum, and just the one red day today is giving back 5 green days, or at least the last 5 days of that leg up. So that's enough for me. I've been bullish on oil since that falling wedge, but this is enough for me to say, okay, I need to take a step back and pause here because things may be shifting a bit. Still a daily uptrend for CVX, but not for oil. Let's see how the inventory report comes in tomorrow. And natural gas trying to confirm this head and shoulders. That left neckline support of 892 held by a penny. Bears are keeping that short-term control, but they need to take out that support to have some more conviction for further weekly consolidation. So the fact that oil and natural gas are both pulling back together is a good reason why energy is also pulling back on the daily. There's a gap down here we're going to keep an eye on. If energy bulls can hold daily EMA 12 and see a green day tomorrow, that'll be a little bit of a sigh of relief, saying, okay, still a strong uptrend. But again, today was just enough of a day to say, okay, need to pay extra attention because things are shifting a bit. Solar sector's holding on fairly well, but I'm watching our lead bull, FSLR, with a potential climax top. And last time we saw that, we did see a little bit more pullback, not much at all, but again, it's another one where we just saw a higher high with a lack of follow-through, and I'm watching this weekly megaphone. So curious to see if we start to see energy, which has been relatively stronger, start to weaken a bit. And again, if the broader market stays weak and keeps seeing fresh lows of consolidation, we look to the stronger sectors to potentially be bear laggards. And so energy and solar, keeping an eye out for that possibility. Just some things we're keeping an eye on. Nothing in terms of an immediate trade. If I wanted to be a real aggressive FSLR bear, I'm scouting an hourly lower high to be the result of this bounce with a lot of space for it to form. We then would have to confirm the hourly downtrend for bears to start to prove something. Overall, bears keeping complete control. Uranium notable strength continues. Burden on bulls to change something because bears have been sitting pretty since Friday. Hope you had a good day. Don't forget to do good things. Thanks for watching and thanks for likes and stuff. Hey everyone, I'm going to share my opinion on student loan forgiveness, which is a hot topic in politics these days, polarizing people. Some saying this is a good thing, people need help, this will be beneficial. Others saying I'm not paying for it, they should have known better, yada yada. I think there's a ton of common ground that we can reach on this topic, and there's going to be benefits that come from this. The common ground is these are predatory loans. They are extremely detrimental to young adults entering the workforce, and the thing that will come from all of this is awareness. The next generations entering college are going to be more aware of these predatory loans and maybe a little bit more picky in terms of choosing their path moving forward. I know personally that for me, I had a big boost up by not being in debt through going through college, and that was thanks to my dad paying for it. So I could say, you know, I'm a self-made whatever because I took the money that I saved up from high school and turned it into where I'm at today, but I had a big boost up by not having that debt. I literally had a moment sophomore year in college where I was saying to myself, I'm going to risk this $3,000 that I saved up through high school jobs in the stock market playing this game, and if I lose, I'll get a 9-to-5 like everybody else. So fortunately it went well and I didn't have to get that 9-to-5, but if I had student loan debt, that wouldn't have even been a question. I would not have even considered taking that route. So in my opinion, you're seeing a ripple effect where these crushing loans are also stifling entrepreneurship, and they're stifling the freedom that young adults have of choosing their path forward as opposed to being narrowed into a set path. You've got to get this job right out of college because you need to start paying back these loans. So awareness is the benefit that's going to come from this to the younger generations.